You probably clicked on this video because you saw don't buy the dip or don't buy low and sell high, buy high and sell higher. And see, a lot of people don't understand how this works and they do the opposite, especially with influencers in the crypto market telling you on a daily basis that you need to buy the dip, buy the dip. This is the cheapest you're ever going to see it. And there's a lot of FOMO that goes into that. Now, what these guys want is they want for you to pump their bags. And I'm here to tell you that that's something that I used to do. And while it has worked, it most likely will not. And especially if you're in like lower cap coins, some of those coins are never going to come back. But how do we realize like when we're in a time of chop, when to be buying, when to be selling? This isn't financial advice. This is just what I'm doing. These are the things that I teach my students. But you do you. I'm about to show you though how a successful investor looks at this stuff so that you don't end up getting wrecked. So let's get into it. All right. So here's the chart of Bitcoin, and we can see here that basically since around March 13th or so of this year, we've just been in this range of chop, and it has just been absolutely uncomfortable for a lot of investors. And people are like trying to figure out what's going on with Bitcoin. Is it going to go up? Is it going to go down? How do I make money in this market? There's various different ways to go about this, all right? There's the HODL way, which a lot of people usually will just, buy and hold, and that's their thing. And that's okay. That's really good. As long as you're contributing into your investment on a weekly, daily, monthly basis, on a consistent basis, I think that that is a perfectly fine scenario, a perfectly fine strategy, except it's a little boring. And when there's times of drawdown, it can really make your butthole suck right up into your stomach. And what we don't want is that to happen. And you can take a look here. So this is the Bitcoin chart. Again, we've been in just like this lull. Should we be buying? Should we be selling? If you take a look from here all the way down to here, that's a 31% loss that you would have had to endure, and it doesn't feel very good. All right. So we're in this time of chop. What I do is I slow myself down. I have a saying to my students: I don't FOMO, I slow-mo. And this is something that I want you, if you're at home, write this down. I shall not FOMO, I shall slow-mo. All right. And I've had that saying for many, many years, because anytime that I slow myself down, I can start to go, okay, this is a rational way. Now, can you make lots and lots of money on some of these meme coins and getting in, or some of these very hot AI coins? Yeah. Is there opportunities there? Yeah. But most of the time, in my experience, I end up getting wrecked. All right. And I have made lots and lots of money that way, but I've also lost lots and lots of money. So I'd rather have consistent, steady gains based off of exactly what I titled this video, which is buy high, sell higher. Now, what am I looking for? You can take a look here. What am I looking for? Now, in using this strategy, this is called the SSL hybrid. It's a momentum strategy. So you can see when we're in the blue, we're buying, we're holding. When we're in the red, we're selling off. All right. So right here is where we actually started selling off in what we call our managed vault. We have a managed vault where we manage on the blockchain everybody's money, so you still have custody. But what we did in our managed vault is we sold a portion of it right around here, because we do it on different time frames. Okay. Now, you can see here, from here to here, this is my buy entry. I would be basically at a loss if I would have sold here and I'm buying in higher. Okay. But what I'm waiting for is confirmation. And a lot of people don't realize that if you are patient and you wait for confirmation, the odds are on your side. Now, the problem with this is that in times of chop, you could be taking small losses. So like, let's say for instance, right here, if I would have gotten in, right here is it on the 3-day, because this would be my confirmation, I would be getting in here and then let's say selling here. So this would be a tiny loss. All right. So let's measure this so we can take a look and see what kind of loss. And if you're using leverage, it can be even more. So right here, I took a little 5% haircut. Now, here's the thing. I didn't put all of my money into it, and that's what you need to realize, okay? Only a portion of my portfolio was in this. Why? So that I don't get the full 5%. So this, in terms of the entire portfolio, may have accounted for, based off of the amount that I invested in, may have accounted for like a 1 or a 2% loss, okay? Of the entire portfolio. Remember, we're not aping in. We're not just like, okay, ready? Let's throw it all in, because if it is, and you're losing 5% at a time, that's where you can take a pummeling, all right? Now, we did actually lose a little bit over 5% in the entire portfolio because we were allocated during this dip, but our entire portfolio was not in. We would have taken a way bigger haircut had we have had the entire portfolio. In fact, 60% was out. That's how fast and furious this dump was here between Bitcoin and Ethereum. Okay, so what are we waiting for though? See, a lot of people, they get impatient. Oh, I'm not making money. This is going to take forever. Well, what are these lull periods called? So these are basically just times of consolidation. They're here to fake out weak hands so that we can keep climbing up. And we see this very, very often. In fact, the average amount of time that we have in these lull periods, it's wild. It's like 150 days. That's on average. If you go back to Bitcoin's history, you'll see that usually before we have these uptrends, we're sitting in a sideways movement during bull markets, an average of 150 days. Now, it could be more, it could be less, but you've got to be able to wait this out, and then you have to be able to get into the market appropriately. Now, we scale in, we dollar cost average in, again, so that when we're here in this full upward motion, we've now got our entire portfolio in. So when we get these upward movements, here's what happens. So we've got, again, a momentum strategy where we are allowing ourselves to take these full movements up. But that, again, we have these times where we do chop to the side, but that's part of the risk. That's part of the strategy. So let's say, for instance, from here to here, when we got a signal, we had a partial part of our portfolio and we scaled in accordingly. But here's where we would have ended up getting out, okay? But look at this return, 113%. That's tremendous. That's tremendous. And guess what we did? We locked in the gain. And this is the most important part. Again, being patient is where you're going to make the most amount of your money. Don't be fidgety. Don't be all these things that, people are telling you buy the dip. Even hodling for me, I just don't want to experience those drawdowns any longer, okay? And this is why we found this strategy and we said, hey, this actually works. Now, again, we have this sideways movement, and typically, anytime we go past 42 days and chop, our portfolio actually goes into a defensive strategy, all right? So we go defense and we start scaling in at a much slower pace, okay? When we're in this type of momentum, we start redlining it because what happened? Well, the trend has broken, all right? So let's take a look at like what this trend would have been. The trend would have been like from here to here. Well, once we've broken this trend line, now we're able to start scaling in and redlining this thing and maybe even using some light leverage. Don't go crazy with like 10x. That's how you get liquidated, okay? But Where are we waiting here? We're waiting for this at around $74,000. Once we get to this $74,000, again, we're going to scale in very slowly here, very slowly, very patiently. Okay, now here again, this is a time where we ended up getting in at a higher price than when we got out, right? Well, here's where it actually starts to work in altcoins, and it could also work to Bitcoin, but it just didn't go down enough for us to be getting out. Now, take a look at this. This is FXS. This is one of my favorite cryptos fundamentally, but it's been trading like crap. It's been trading like garbage the last few months, okay? And actually the last few years. They've gone through some things. This team, though, really cares about their community. They really care about building innovative things within their decentralized application. I use their decentralized application every single day. All right. Every single day, I use their decentralized application. Now, let's take a look. Frax, I got out about right here. Okay, I got out about right here, which was about $8.32. Now, check this out. This is a perfect example of how you can really save yourself losing momentum. So right here, I saved myself 72.9% by being out of this trade. Now, the coolest part about it is check out my entry. So my entry is $2.63. So I got out at 8:30 something, and I'm getting back in at $2 and some cents. Now, check this out. I actually think Frax, and I've been holding a lot of it. I got into the private sale. I actually think Frax is going to be going to about $100 this cycle. This isn't, again, not financial advice. You do you. But let's take a look at this. How this really looks insignificant. But let's take a look at it from this standpoint of view. Let's go to about, let's say, 290. Let's say that's where we scale in. All the way up to 100. That's a 330x return. A 330x return. So if you were to take $1,000 and invest it in this, okay, not using leverage, not using any of that, not doing yield farming, another thing that we teach, and like accumulating more of Frax, just buying and holding this, all right, you could turn that into 3,300. Now, is it guaranteed? No. Are we still below this red line? Yes. But are we getting close to our entry? 100%. All right. And I believe, based off of what this team is doing, using this momentum, these indicators, and the fundamentals, understanding the investments that I'm getting into, all right, not just buying XRP because it's the bank's coin and they say they're getting into these things. If you take a look at their on-chain data, there is nothing going on in XRP, but there is everything going on in Frax right now, all right? It is climbing the charts in terms of L2s. Right now, I think it's number like 15. Every day, every week, it notches up 1 or 2 spots in terms of total value locked, or TVL, the amount of money that is in their ecosystem. And they keep building innovative products. They got a new one coming out here with Bitcoin, where you're going to be able to make like 10, 15% per year just staking your Bitcoin. I'm really excited about that. But at the end of the day, this is one that I think, again, we can use momentum. And once we flip here, you'll have the opportunity to get in and make some real money. And if you're interested in learning about this momentum strategy, about what we're investing in, about decentralized finance as a whole, I have a 7-day free trial down below. Click on the link. We're really interested in showing you exactly how you can make money in the up markets, down markets, and sideways markets. And at minimum, teach you how to preserve your capital so that you can lock in those gains. So get over to that link down below. I guarantee you'll love the community. The community is amazing. Anyways, let's get back to this. This is how we handle risk, guys and gals. So you want to make sure that again, at minimum, you are managing your risk when you get into this, because I've had so many students, myself included, I'm my own student, that have gotten into the crypto market, seen their bags pump all the way up, only to watch them come all the way down. And I don't care what crypto it is, you want to be locking in gains. And we do have a strategy that I'll teach. Maybe I'll do a video on it here, where do I take my money so that I can make sure that that part of my portfolio is secure from volatility, and I can sleep at night with lots of peace, as opposed to like, shit, is Bitcoin going to go up or down, or is it going to, nuke while I'm sleeping? Those are the types of concerns that you want to alleviate by using more conservative strategies. You know what? I'm going to make a video and click on right here and watch it right now. All right. Cheers, everybody. See you on the next one.